SpaceX jumped 28%. Lab scores at 47 out of 100. Hold. First-stage boosters now launch for $2 million, a significant 87% cost cut from legacy $15 million hardware. Rapid vertical landings now enable a 30-day turnaround, slashing flight schedule gaps. Stay tuned as the lab tears apart how reuse reshapes SpaceX's economics and future growth. SPCX just surged 28% because its 4% payload mass fraction makes its hardware position an unbeatable competitive strength. Payload mass fraction, the percentage of a rocket's total liftoff weight that actually reaches orbit, defines SpaceX's ultimate hardware moat. While Rocket Lab's Neutron struggles, SpaceX dominates orbital bandwidth with Starlink's phased array antennas, flat panel antennas that steer radio beams electronically without moving parts, to route gigabits of data directly. This vertical integration completely bypasses the traditional aerospace supply chain. Today's closing price of $172.84 reflects the market finally pricing in this absolute launch monopoly. Quarterly financials showing modest revenue momentum for SpaceX. By Q4 2026, geopolitical policy will drive government defense revenue growth of over 15%. While a normalizing yield curve and a 7.6% recession risk signal macro stabilization, the Federal Reserve's 3.63% rate acts as a friction wave, raising borrowing costs for Starlink's constellation. Meanwhile, escalating trade wars and new tariffs on imported aerospace-grade titanium directly increase rocket engine manufacturing expenses. Yet, this geopolitical friction is also a powerful accelerant. Escalating tensions in Eastern Europe forced defense agencies to fast-track military contracts, turning government spending into a high-margin shield. SpaceX is riding a dual wave where regulatory headwinds are crushed by urgent national security demand. Segment 3. The PR Insider Filter. SpaceX, SPCX. Management's headline this quarter. The most misunderstood IPO in decades. 3 words designed to make you feel like a visionary for buying in, while making you not think about the balance sheet. They want you focused on Mars, not margins. Here's the decode. R&D hit $8.6 billion, 46.3% of revenue, up 149.5% YOY. That's not efficiency. That's a burn rate signaling either desperation or conviction. No insider selling? Fine. But no buying either, 0. When founders go silent on equity, it's not confidence, it's caution. And the engineering reality? Starship's Raptor engines still run at 80% theoretical thrust. The PR says, next chapter. The hardware says, still testing. What management is saying, misunderstood. The momentum breakdown for SpaceX. RSI sits at 50, pointing to neutral zone, waiting for a clear directional signal. MACD is currently bearish, with downward histogram pressure. Reusable boosters, /launch costs. Defense contracts drive near-term revenue. But here's what breaks the bull thesis. FAA, launch suspensions. Rising titanium tariffs also threaten engine margins. The lab's AI score of 47 reflects neutral conviction. A bearish MACD shows clear downward pressure. If the upcoming orbital test flight succeeds, SPCX will challenge key resistance at $181.48. If a mid-air explosion triggers FAA grounding, expect a rapid decline to major support at $164.20. SPCX's wafer-level packaging yields just hit 94%. That's the margin inflection we've been waiting for. Bulls or bears winning SPCX this week? Comment your prediction. This isn't financial advice. We're engineers, not brokers. Markets move fast. Do your own research. Past performance never guarantees future returns, and always verify the data. Subscribe to get the next die-level breakdown before Wall Street catches on. The lab's out.